And we're live.
Morning, Sean.
I didn't have to greet you, Bill. Good morning.
Oh, sorry. I jumped the gun.
It's that coffee.
That's
Morning,
right.
Katie.
Good morning, Sean.
Wow.
Sorry, I didn't mean it like that.
Wow. Good morning.
I need more coffee.
We have a really interesting topic today that I'll go ahead and say I can get a little passionate about.
Oh, yeah, I totally anticipate a lot of Sean Levon
I'm not
passion
joking.
on this topic.
I'm serious.
I
get
am
passionate
being
about
serious
this topic.
as well.
It's an obscure one, but I get passionate about it. But before we dive into that, wanted to give a shout out to Drew from Australia,
Hey, Drew.
who wrote in last night, complimented Bill's improv, said that he can tell that the lessons are working.
Poor Drew.
Drew's like, no, I didn't.
I believe what you actually said. First of all, freaks me out that my voice is being heard in Australia. Never would have expected that.
It's upside down, though.
It is upside down and probably at 2 speed. I believe what Drew actually said was we take what can be a dry, dull topic and make it interesting. And while not everything applies to Australia, he still finds value in it. So some of the stuff that we do every now and again maybe possibly has value. I'll take that.
It's a win.
And sometimes we're like, okay to listen to.
Sometimes.
Sometimes we get a little ridiculous,
Sometimes.
usually.
Bill's the giggly one.
Okay, you know what? The last episode, there was a lot of laughter that, listening back, I regret that.
We bring
that
laughter
choice.
to comp.
You, Bill, you bring laughter to comp.
It's true. I'm just here to
Yeah, it's my
here to
job.
harness the Coleman spirit.
Woo.
So the topic today, and this is getting a lot of coverage in the last 2 days, basically since Monday. We're recording this on a Thursday. It came out Monday morning, early Monday morning, and the topic is that the Business Roundtable, which is a big lobbying group that has, I think, Bill, correct me if I'm wrong, about 200 members, 200 of the biggest companies you've ever heard of, basically, that are members of it.
Right, pretty much everyone's heard
It was like
of every
Amazon,
company.
Apple, Walmart,
JP Morgan.
Yeah, JP Morgan.
Big companies are members of this. What they came out with this Monday was something that 182 of their members, CEOs of those companies, signed. What it's doing is, if you look from what they put out in 1997, but it was a trend from the 70s until now, they changed their stance in 1997 to say that only shareholders mattered. They had a fiduciary responsibility to their shareholders, and that was what mattered above all else.
Correct.
What they came out with this Monday to say is that shareholders are part of the equation. They need to factor in, I'm going to use this term, I'm not sure they did, stakeholders, right? Communities, vendors, employees, and shareholders. So not everything needs to be driven by meeting your growth and profit expectations for the street.
Correct.
I'll start this off,
Uh-oh.
and let's jump in and have a conversation about this. Blows my mind.
Expletive.
I'll beep it out. Beep. Blows my mind that this is getting as much attention as it does. But I'll be fair in saying that it should have never been that way to begin with. Right? If you play this out to its natural end where a corporation cares about nothing but profits, well, then everything else collapses around it. You don't have an infrastructure. You don't have employees that are taken care of in a community near you. You don't have the ability to grow because you're sapping resources from everything else if you play that out to its natural end. End rant.
We're starting, huh?
Jump in whenever you like. I told you I'll get passionate
Bill has
about
something
this.
to say.
True, although without profits, or without,
The inverse is true,
without
too.
the financial metrics,
A business needs to be
a business
profitable.
will go out of business faster.
Yes.
And so I think the old theory was, if you keep your business running profitably and efficiently from a, sort of financial markets, Wall Street perspective, you can then afford to do everything else. Dare I say, sort of a trickle-down kind of mindset. It's like if you have lots of money, you can then do charitable things with it.
But I think that's what you know, in theory.
Well,
I'm
in
not
theory,
sure you
but
ever saw that playing out too frequently.
Well, right, because that,
Trickle down never happened.
Because, once you write that check, you don't have that money anymore, and therefore you're.
Well, and a couple of trends have happened, right? You see the exponential growth in executive pay versus average employee pay, and so a bunch of the money from profitability goes there. And I think you've also had a shift in beliefs. If you look back at where we got to between post-World War II and the 70s, where a lot of companies wanted people to stay around forever. It's the classic, like, use IBM as the example, failure or not, use Verizon or what was Bell, all the Bells then as examples, that wanted employees to stay around for life, that gave them pensions and gave them benefits and gave them a lot of reasons to make sure that they stayed, because their belief was the more they stayed, the more that they would get out of them. The more, not necessarily just productive, but like the collective knowledge that they've had there. Right?
Well, yeah, and actually that's a good point, is that the mindset was you work for your career, for me, for my company, and everything was geared around that, and that's, pension plans is a great example of that on a number of levels, I think, because pension plans only benefit those who are long tenured employees when they retire.
Correct.
And it also, sort of in the 70s and 80s had the same problem of, if the stock market's doing well, pension plans do well, but the company benefits from that because they have to put less money into the pension plan, whereas 401ks, if the stock market does well, the individual employee does well. So all the employees wanted 401k plans and wanted mobility.
Right, to be able to take it and go somewhere else. But
Right,
I think,
and invest it as they see fit so that they could lose money
and
more readily.
I want to be able to lose my own money. And on a scale, we probably did reach a tipping point there because a couple of things happened. You had more globalization coming into play, where it wasn't, in post-World War II, it was all about America, right, in terms of an economy. And by the time we got to the 70s and 80s for sure, globalization was starting to happen, and that trend has just accelerated even more. Like, it's a smaller world for all intents and purposes now, right? So you had to become less, to put it in the words of corporate raiders, bloated, right? You had to become a little bit more nimble and agile. But I think what we've seen is probably an overcorrection now, too, where it's profitability and shareholder value above all else. Not to say, and I agree fully, it cannot exist as a business if you're not profitable. It's just not possible unless money's coming in from somewhere else, right?
Right.
So you want to be profitable, but we've stripped everything almost to bare bones. Not quite, but we're heading in that path. Whereas I think there needs to be a balance. I think of somebody like Richard Branson, but I could cite other CEOs too, but he's just most notable out there saying this. But I would say the same for Tony Hsieh, for example, of Zappos, that believe that they take care of their employees so the employees can take care of the business. And in doing that, you have to incorporate stakeholders, the community, the vendors, right? All of this has to work well together, because if you beat the hell out of your vendors to where they're not making money, then you don't have a vendor, right? You need to make sure that everybody in this loop is a virtuous loop. Everybody's making out well. Anyway, sorry.
That's okay.
This is my point in saying that it blows my mind that this is a big deal. But I guess it is. I guess it is a big deal that they're signing their names to a paper and saying that they believe that there are more audiences they need to worry about than shareholders.
Well, it's funny because the first thing I thought of when I heard about this was knowing who the category, who the group of signatories is, not any individuals, but the big name companies, the ones that everyone knows. Those are also the companies that are really struggling in recruiting, particularly the millennial generation, because the millennials are not as a group. I don't want to broad brush, like paint a picture of all millennials.
Here's what I'll tell you about millennials: they're terrible. They want everything
not
right
true.
now.
Not true.
And
not true.
they job hop all the time.
I'm very offended.
No,
right
let's
now.
not stereotype. That's right.
But there is a much bigger push now for doing good for the community, having other things besides money as being your driver, and
that's like a top driver for millennials too. It's not just like this is nice to have. It's like research shows that it's a huge factor in considering where to work, like right up there with salary
or above it. And they don't want to work for the evil empire.
Yeah.
They want to work for
it's
apologies if I get the company wrong, but the Tom's, the shoe place. We make shoe. We make a pair of shoes and we donate a pair of shoes, or Bombas socks, same thing.
Warby Parker.
Yeah.
They do it with glasses.
So, and that appeals a lot to these, to the younger parts of the workforce in particular. And like, I know for a fact that many of these big, huge, older companies are having a hard time recruiting younger talent, and they're losing lots of talent, not just to the cool tech companies, but also to companies that have a mission above and beyond the almighty dollar.
I think you're right, Bill, in what you're saying, that this is clearly part of this is a PR play where you're trying to make sure that you're getting the right people in the door that would maybe be turned off otherwise. And I think it's because you're starting to see, again, if the 70s or 80s were an overcorrection one way, or not an overcorrection, if the 70s and 80s went too far one way, and now we're starting to head too far the other way, what we're looking at is like this middle of the road here, which is to say, sure, we believe in capitalism. We also believe that capitalism can do good. It doesn't need to be pure profit above all else. Get that you need to be profitable. But why don't we help everything else while we're doing that? Why don't we try to do good in the world while we're also making money? I think that's generally what you're hearing from millennials.
Correct. And I think that part of this is to say, we corporate America can do both. And that's, and that it is in part positioning a PR statement to help recruiting and help, doing business with other companies.
I wonder if this is like, these massive organizations, if this is their answer maybe, or their version of what we've seen some other companies do in terms of like the B Corps.
The B Corps, which is, are you familiar with B Corps?
I'm not.
Is
anyone out there familiar? Nobody said yes.
Anybody
no one
in podcast
said yes.
world?
Wow. No, I'm sure. It's like a group of organizations that have essentially signed on to their mission to do good. Essentially, I'm not butchering
clear,
what it is.
It's not just a sign on; they have to go through a process to become a B
True,
Corp.
and they're certified as B Corps.
They have to prove that they are doing good in the world and what they're doing as well. To be also,
I'm trying to think of.
It's like you would have an S Corp or an LLC, and it's not that you would. These things aren't competing. But like in other words,
it's not an IRS thing.
No.
But
have to show upfront, and I believe every year audit and show proof of that you are doing your part in the world. That it's not just right. So B Corps balance purpose and profit. They're legally required to consider the impact of their decisions on their workers, customers, suppliers, communities, and the environment. Ben & Jerry's, Cabot, Stonyfield, Hootsuite, right? These are just some of the logos that they have on their site. It's companies that are striving to do good in the world while also doing what they need to do.
And it's on their products too. Right. So my toothbrush I know is a B Corp.
It's funny you brought up toothbrush because I was going to say that has more teeth than this Business Roundtable, this is a statement, but a lot of the criticism I've heard and read about this is that it's just a statement.
What? Yeah.
And it's sort of, vague on the verge of, motherhood and apple pie kind of, we're going to treat our suppliers well. Mm-hmm. Does that mean that those procurement people that are just always beating people up to squeeze every nickel out of a contract are going to be a lot softer about that?
Yeah.
Similarly, there are a lot of, this is a part if I had access to these people and could ask anonymously, there are a lot of like financial institutions here, like, banks, investment banks, investment companies, hedge fund companies in here. And it's like, are they going to hold companies to lower financial standards because of this? I mean, they're saying like, we believe in this, but their business also kind of relies on them being
on
the
profit.
arbiters of what is a good, strong business.
Yeah.
The analysts say, we should buy, they say we should buy Cheeky Panda, even though they don't make as much money as their competitors, but they're doing more good. Are we going to start seeing that?
Well, I think there's two things to look at here, right? And I'll answer it probably, from my opinion, in reverse of the way you asked it. I think one of the things you see with companies that try to also do good is they build a really solid brand. It's an easier thing, I'd argue, to build a brand around, which does if you're building a good brand and people are buying it more often, then you're more valuable, even if you still have these philanthropic parts of your business, these altruistic parts of your business. But the second part, I think what you're hitting on, which is the interesting part of this as to how this comes to life, is fewer companies are publicly listed than they have been since the 70s. And more companies are going private than they are going public now, like this year. And there's a whole host of reasons that that's happening. But I think at the core of it is effectively what you're implying here, which is it's always a chase for what's happening this quarter, what's happening today, how did your stock do, because of the way that Wall Street operates today. So it's really difficult in that case, and this is not just a philanthropic thing, it's really difficult in that case to invest in R&D. It's really difficult in that case to invest in employee benefits because you're chasing did you hit your profitability numbers this quarter? And it's not great long term, and I think we see that that's a problem now that we have more. We see it for sure in the numbers of publicly traded companies. If you need to retool your technology, take Avaya, for example. I'm not picking on them, but they're just a good case of it. Publicly traded company, well-known tech leader in the communication space. And they're like, we believe that we have to do different things with our business to be able to be more forward-thinking, to reinvent our technology a little bit, to take that next step. We're going to have to go private. And they had a PE company buy them out and go private.
Right.
And that is the case more often than not now when a lot of companies are delisting, is because they want to be able to keep up, right? And so if we're on this constant pace for quarter numbers, it's really difficult to invest long term then.
Correct.
It's the first thing that gets cut if profitability is not where it should be. So you have these two things at play, right? So your point, I think, of what you're asking is, are they going to be long-term investors? You see some of that stuff surfacing where Eric Ries, who did the Lean Startup, is now doing his own stock exchange. It's a certified stock exchange that rewards long-term investors. Is that going to be a trend, do we think?
I think that's beyond the scope of this podcast. I mean, that is the point, though, is
right.
and I did find it interesting that there are these people who are, business analysts and variants of that, who it's not just their own company that they're looking at, but every other company. And you're right. Like the stock market has grown into this, like everything else now, and ADD kind of like, what's the price today? What's the price now? What did it move? In the last minute, people have tickers on their desks and things, and it's
flash trading,
day trading, right?
Yeah,
day trading became flash trading. And it's like all of that is just completely counter to the sort of spirit of this. And I think everyone's known that the stock market has sort of turned against long-term R&D.
Agreed.
And that there's just too much pandering, I don't think is the right word, but too much catering to that mindset in making your business decisions.
Yeah, again, I think it's something we've seen play out.
Right.
When you value that above all else and not including other aspects of it, you're not a sustainable long-term business. That's also why the stocks included in the Fortune 500 companies or stocks included in the Dow are turning over more than they ever did historically. There's a lot more disruption happening, and that's one of the possible reasons.
Yeah. I mean, and should there be a downturn, which, lots of people are predicting a recession, slowdown, whatever you want to call it, what happens to these 180 or so companies when the question is profits versus layoffs? And our audience is listening and sitting there in the heart of HR going, oh, good point, because it's hard.
That's a great point you make, Bill.
Help us. I don't know what to say. Yeah, I mean, there should be inside these companies some pretty, heated discussions over, should we have layoffs or should we, warn the street or warn, warn somebody that we're taking care of our community, taking care of our employees. We don't want to ruin our vendors, stop paying people. We don't want to.
To be blunt about what can drive that specific part of it, I think, is to say that a lot of executives, and we can target CEOs, but a lot of executives, period, at these companies are rewarded by stock value. And so
by and with. I mean,
yes, correct.
I mean, both components.
Right. So I think that, and that's one of the reasons you see them also pushing this. That aligns them with the street.
Correct.
If it's not long-term stock value, right? If the options, for example, grant quickly, right? Or if they can sell quickly, they need to be locked up for longer so that they're thinking more long-term. But then, in theory, in modern times, that does not align them with the street, right?
Right.
But it does align them with the business and with vendors and with employees and with community, right? So it's this interesting dichotomy that'll, I think you raised a good point. The people who are signing this, a lot of them, are in a position to push on the companies that they are shareholders of and say, for example, I'll give you an example because it depends what degree you apply this to, but in a company that I was at previously, they would push on you to make sure that A, you're taking care of your vendors, and B, you're making smart decisions. So as a software company, where are you hosting? Do they have wind-powered server farms or solar-powered server farms, right? Those kind of questions so that you're doing good by the world and not just saying, making the quick decision or the cheap decision, that you're thinking it through, right? These companies that sign this not only can do it themselves, but they have the power to push on others to do it. So will they do that?
The power. That's funny.
You, sir. Will they do that, or will they, the second something turns towards, recession is a good example, will they just pull back and be like, you know what, it's profitability again?
Right.
But
yeah,
also,
exactly. Get rid of the green server farm. We're going to go with the cheaper, coal-powered one.
Yeah.
Yeah, but also and when we were talking about the B Corps thing, I was thinking of this is they didn't, correct me if I'm wrong, but they didn't actually commit to
anything.
Next steps, right? They're literally just signing a statement, whereas at least in the B Corp example, you have to meet this criteria, and year over year we're checking to make sure you continue to. And this is just we're going to be better.
Right. I mean, what'll be interesting, and maybe getting too far into the weeds, is next proxy season, next spring, are we going to see executive incentive plans
Aligning to it?
Right. Mm-hmm. No longer just measuring financial metrics and measuring things like involuntary turnover or, greenness of your vendor or, carbon footprint of your supply chain, which is, by the way, this never-ending thing because, if you go to, in your case, Sean's case, if your hosting is done by a company that's not green, who are their vendors and, and so on and so on. It goes pretty far.
It can go pretty far.
It can go pretty far, and it's very costly and ugly 100%. Thing to do. But are we going to start seeing measures of things that align with not just what's good for the shareholder directly, but what's good for the other stakeholders? And so, will the CFO have measures for, supply chain relationships?
Sure. Do they better align with that period, right? And I'll take that even to the board level.
Yeah.
Does the board start to care about more than just profitability? Do they insist that these things are going to be taken into account? Or do they even appoint somebody that is there to see that part of it, as they would advocate for that part of it?
And do they, from a compensation perspective, do you rebalance the mix of pay so that there's less executive pay tied to stock or delivered in stock and more tied toward, cash that's based on other metrics?
Things that are good for the business and good for all stakeholders.
All stakeholders.
Yeah. No, I think that'll be fascinating. And just to play it out here, I think one of the things that you could see, the natural response to this could be, right? Because one of the things that you'd want to do in this, for example, is raise the minimum wage, right? Helps better take care of your employees, better takes care of the community, right? Now, the natural argument that comes into play there, that means, well, then you have to raise the cost of your goods or your services, right? So this will be interesting to see how it plays out if everything raises, or it's an economic theory argument until it actually plays out.
Right. Although you don't. I mean, that's sort of the point of this, is you don't have to raise, you could raise salaries without raising cost of goods, take care of your employees, keep your customers neutral, and let the shareholders
as long as the shareholders
are
okay with a lower return.
Right.
Right.
But this statement is saying we're putting shareholders on notice that there's going to be a rebalancing of how we make decisions and who who benefits from those decisions.
And do we think this will play out to other non-publicly traded organizations? I mean, I think there's a lot out there. We were talking about B Corps. There's a lot of companies that try to have this model anyway, but do we think this will influence that?
I don't know. I think it's giving this is giving companies an out to be able to say our decisions are not just about shareholder return and maximizing value to shareholders. It's about other things. And so the big companies are looking for a way to justify making decisions that don't directly help the shareholders. And ultimately, I think as we sort of led off this discussion, everything that they do will help the shareholders, but in the long run, by building a better brand and a stronger company. And
the company should be around for longer, right, in theory, if they're making these kind of decisions.
Right.
I mean, I think that would be the hope, is that by incorporating other things into the decision-making, they are able to invest more in employees in R&D and keeping employees that they want to keep.
Right, and keeping, I mean, we sort of touch on this a fair amount when we're sitting here talking, but keeping employees is often a lot cheaper than replacing them, and people just don't test that a lot. And so I think, keeping employees, it has may have an immediate cost because you're providing better benefits or higher pay. You said, Sean, raising minimum wage.
But long term, you're saving.
But if you cut your turnover by 50, 60, 70%, that can save you a fortune, especially with people that have, or roles where there's a high ramp time or, other thing to get familiar with the job or worse, to replace a person, and in an economy like where we have been recently, at least, some of these high-skilled jobs are very hard to replace.
In theory, this is a good thing, and I get your point that companies that are not publicly listed, depending on their structure and their investors at that point, can make these decisions already, which is why you see a lot that are trying to do good. The B Corps of the world, for example, just using them as an example. But there's a lot of others out there. Salesforce has their 1-1-1 model, which is commit 1% of your product, 1% of your employees' time, and 1% of the resources available to philanthropy.
Right.
And they encourage others to do something similar. And so there's a lot of companies that are trying out there to do this good in the world, and it's nice to see we're looking beyond the short-term interests of, it's easy to point the finger at, the short-term interests of Wall Street, but we're just looking beyond short-term interests. We're starting to factor in more what should be factored in a corporate enterprise, right? You need to have good employees that are productive and happy. You need to have vendors that are the same, right? All this stuff needs to come together. And by the way, your community can't be trashed then either, because your employees probably aren't going to be happy, right? It's not great to go home to that.
You want to be in a good, happy ecosystem.
Yeah.
That's productive and, mutually beneficial.
And you are a stakeholder in that, and they're a stakeholder in you for that reason. It's a virtuous loop. So it's cool to see that.
Yes.
Blows my mind that this is the thing, but maybe I'm just idealistic or naive. I don't know.
Right. Well, I mean, there are plenty of people out there, yesterday and today saying like that this may or may not be a thing. I think we have to sit back and see, like, is this real or is this
like, how does it come to life?
Right. Is it more than just a one-page,
more than just a PR stunt
statement on the purpose of a corporation?
The fact that they're acknowledging it is a big shift, and
Correct.
It's a good thing, right?
I agree with that.
It's been a little over 20 years, 22 years since they went hard the other way. So that's a good thing, and it's good that we as a country, it's good that we as a business community are learning lessons and advancing because of it.
Right.
I hope that this brings about change, because I do appreciate that about businesses that try to create that part of the world.
Done.
We talked about what ramifications this could have on comp a little bit, but I think one of the things you'll start to see, hopefully, is, for example, longer-term incentives, maybe raising or at least assessment of what's a good minimum wage, not just what might be federal for sure, or state or municipality, but what might be a livable minimum wage for the areas that you employ in.
And this actually reminds me of, I was listening to the New York Times podcast on this topic, The Daily, and they kind of got into the history a little bit, and they brought up Ford, and in the early 1900s, raising minimum wage for his employees from 2.5 to 5, which is part of that motivation was not just to keep them because they couldn't make that anywhere else, but also so that they could afford the products that they were building. And I thought that specifically was, I'm kind of going on a tangent here, but like super interesting.
I can't afford to pay factors. Bill.
Do you need that in your personal life? Are you going to market price like your kid's allowance?
What other considerations do we anticipate might have comp-specific ramifications if this comes to play like we were talking about?
Well, first of all, I think there should be discussions inside organizations about what this kind of thing means to their organization, what they're adopting. And then, as always, the compensation plan should align with and encourage and reinforce those messages. I think some of these are less specific and less
tangible.
Less tangible, but you can see how incentive plans can take some of these things into account with things like employee satisfaction. Just say, as a simple thing, is like, are our employees getting happier? Are employees like bigger proponents of our company and our mission, what we're doing, and starting to measure those things. And I think, we've hit on it fairly hard here. It's all about longer term, like how is the company doing as opposed to the short term kind of thing. So will long-term incentive plans have less ability to pay out in the short term?
Right. You tied in for a longer period.
And I would get shot if I recommended this to a company, but, as a provocative statement to think about is like, what if all executives, like equity plans, their stock or their options or their RSUs, what if none of them paid out until after they leave the company? You can't take any money out. You're getting paid plenty in base and bonus to live on, and your job is to build the business, or it can't get paid out for 10 years or something like that, which is truly long term, whereas now long term is like 2 to 5 years. And by the way, you start vesting early, and you can sell your stock at any time.
How is that not a pension?
Well, it is effectively a retirement plan.
In terms of how you're incentivizing. Now, it's different because you're not investing into it, in theory.
Right. But it is in a way, but it's also, and again, I'm saying this is very provocative, and it's,
Bill Coleman out on the ledge today.
I will host the podcast if some company actually does that.
Bill, wait. Bill will fly to your location.
I know what's coming.
With a Zoom microphone.
And a zebra suit?
No, maybe. It depends what he's feeling that day. And interview you if you do this. You will get a visit from the man, the myth, the legend himself.
Yeah, all right. Maybe.
Right into coffee at payfactors.com.
I like this.
But the point is, if you think about it in those terms and then cut back to something that makes sense and is reasonable,
sure.
As a, clean slate, how would you, if you were starting a Fortune 500 company today, what would you put in place?
I want to build Ford.
No, to just start there.
That's what you woke up thinking this morning, right, Sean?
But I think there are a lot of compensation impacts to this, and I think it will be, dipping toes in the water and testing things. And I think in reality, you'll see a handful of these companies start injecting like one measure or two measures into an existing short-term incentive plan to address, what this statement means to that company.
That there are more stakeholders than just shareholders.
Exactly, and make people aware of it.
Yeah.
It would be sort of cool if, companies communicated all the way down to the bottom of the organization who their stakeholders are. Just that in and of itself, so that people are aware that somebody besides the shareholders or the owners or whatever it is in your company, there are other people that rely on our business and work with our business and need us or
take these factors into consideration when you're selecting a supplier, for example, or make sure that we're doing these things when we do, right? Yeah, those are great things. It would also be nice if they look to invest more in the local communities that they participate in.
Right.
Whatever that means to them.
Correct. And that's the thing, is it's got to be personal and real.
Yeah.
Not, we're going to do a community service project so we can put it on our recruiting website. That's
Right, so we can check the box.
yeah, checking the box. This is not about checking the box.
No,
this is about real change.
Thoughtful change.
Yes,
Yeah.
meaningful, and and I think, at least to the extent that my earlier point, millennials are somewhere involved in this. The millennial mindset is like they can also smell a fraud a mile away.
Yeah.
It's true, we can. We have fraud sniffing technology in our
It's an
noses.
app in your phone, isn't it?
It is, right? Right, Tessa? Yeah. Yeah.
iFraud, Doug.
Yeah, exactly.
You have the iFraud app.
Yeah.
No,
How do
it's-
you know our secrets?
I think anybody can do that. It's pretty clear if you're just using words and not following that up with
Right.
actions.
Right.
I think the difference is millennials are more likely to say, "You're not being real about this."
Right.
I thought when I started here, for example, that
Yeah,
you were.
like they're going to
and-
call you on your...
Yeah,
Yeah.
I'm not going to stay if that's the case.
And I think this is going to be even more true with Gen Z, which is now, I mean, people think of millennials. I think in their mind, a lot of people think millennials are still 22 years old.
Correct. They're not.
But like millennials are now having children and are growing into being the business leaders, and
Gen Z is just entering the workforce. I
exactly.
believe.
It's yeah.
Yeah, well, hey, I'm going to argue this is all a good thing if it actually comes to life. We should take account more things than just pure profit. We should be profitable.
Right.
We should keep everybody well paid and happy to the extent possible, but that means keeping everybody well paid and happy to the extent possible. Well, hope this was an interesting topic. We tried to jump on this one quickly today because it was happening this week, so we're going to get this pod out as soon as possible. Bill's an active podder. He's in the pod community. He's going
I'm
to
saying
edit
pod
this.
a lot.
He's going to edit this and get it out. Thanks, Bill. We'll be back next time we have a couple other pods coming up soon that I'm looking forward to. We also have the median versus outlier, and we have some other stuff coming up soon about reporting and visualizations. So,
Sean, what else is coming up? Pretty big.
Bill's birthday?
Shameless plug.
Or, CompCon.
Isn't it Bill's birthday?
Is it Bill's birthday?
Is Bill's birthday at CompCon?
Yeah,
Wait, Bill's.
Yeah, my birthday's coming up in about 10 months.
I was gonna say, when's your birthday?
I thought we were celebrating at CompCon.
We celebrate every month.
Every day.
The other big thing coming up, we have only a handful of tickets left for CompCon in San Francisco. I'm excited to hopefully round out our speakers this week. We're in the final negotiations with the final speaker. It's going to be awesome. Get your tickets if you're in the San Francisco area, or if you want to come out, see us, see Bill, get a hug from a zebra. It's all gonna be there. It's all gonna be happening.
When is it in October?
October 21st and 22nd, Bill. That's a great question.
In San Francisco.
In the Bay.
Got it. In the Bay.
In the Bay.
Literally, we're on an island.
One of the
actually.
early considerations that I was pushing hard on was having a team building exercise where you have to build a raft in row 2 Alcatraz. Got rejected for a bunch of different reasons, but we'll see what we can
Still.
do.
I can think of some reasons.
It's still in his mind. He's
Maybe-
gonna make us do it. Like me.
I'm thinking
Jess,
maybe we
Sean
send,
building
we
a raft.
Just send Sean.
I like
do
Alcatraz.
it.
Yeah.
I'll do it.
Could we give him a couple of some old logs and I don't know, some leaves?
Listen. Here's the deal.
twine.
We have another guest coming up on the podcast. I believe we're recording it next week. David Goggins, who's the keynote. If me and David Goggins can do that, and by me and
Actually-
David Goggins, I mostly mean David Goggins. If we can do that, I'm
David
in.
Goggins, the former Navy SEAL.
Yes.
Former Navy SEAL.
Endurance athlete.
If
Yep.
I can have him help me with that, and
Nice.
again, by help I mean
He'll just
You
do
know-
it, and you'll
you know what
cheer
you-
him on.
I'll keep him hydrated.
You know what his first thing to do is to get that done? He's going to throw you off the raft.
Listen, Sean, you're too much weight.
Yeah, exactly.
Get out.
You're a drag. Come on. That's the SEAL way.
Be in the middle of CompCon day one. Where's Sean? Where
You're a strong swimmer. I'll
can't
see you at
find
Alcatraz. All right. Well, we have a lot coming up. Look forward to it. Hope to catch you guys at CompCon. Going to be exciting. Going to be a cool event. And I guess that's about a wrap for today.
Sounds good to me.
Over and out.
We'll catch you next time. Thanks, everybody.